All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Saturday night, June 13th, 2020. So we just did our inaugural Saturday morning check-in for the folks in the hybrid uh, trading workshop, and that acts as that was the first of what's going to be just an open-ended series of Saturday morning question and answer sessions for the guys in the hybrid workshop. I had originally planned to have those to be monthly, and so the original schedule I sent out had one in July, one in August, one in September. But it just seems to me that that a once a month pulse is not a good way to maintain contact with material and to build on it and then have a regularly scheduled checkup. So instead of one monthly or three Q&A sessions once a month for 3 months, I'm going to make that an open-ended check-in weekly through the end of the year. At the same time, folks that are in the coaching project, the Coaching 2020 project on Basecamp, and those would be folks in the Gold and Patreon level of subscription. You guys are invited to those as well, and so I'll be soliciting questions from you, really from what I see in Campfire, and then what I get from you on the in the Basecamp question areas for hybrid trading and in the Coaching 2020 project, and in that way, my intention is to kind of converge those into good standard trading practice with lessons learned as we go. So that's the plan for that. So I put the registration links for the Saturday morning podcasts in Basecamp, and then everybody that was registered for the hybrid workshop seminar should have also received that as an updated schedule. So the next Saturday morning check-in for Q&A will be June 20th from 10 to 11 Central. My intention is to try to be more concise on those and get it knocked down to an hour of just concise material. As you know, if you let me, I'll just keep talking. So I want to try to get that to be a concise hour. Okay. The recording for this morning's session, which was a 2-hour session, first of all, I thought that was really good. And the recording is for you to judge. It's posted already in the hybrid workshop and as a lesson in course number 104 in the learning management system. So that's already available. I'm going to post the link to that in Patreon here just as soon as we get done with this one. So, and then this recording will get posted tonight as well. Okay. So one of the things that really struck me this morning when we were talking about this was the opportunity to leverage each other's goodwill and skill in and working together. So Neil had talked about organizing a Discord chat server, for like the day traders who are working on alerts, and the Euro team and the guys in Coaching 2020, there's a couple different work groups that are in there that are working on like swing patterns. And so they're using weekly check-ins and Zoom meetings and some text messaging, whatever. They're working at a slightly different rate of collaboration, and so that works. So my intention is to continue to use Campfire for the original purpose, and that is for you to post your trade frames to show setups that basically announces your intention on how you want to trade, and then to use the Basecamp as a way to support you with collaborative learning, a collaborative learning environment. Right? And then I'll use the Saturday morning Q&A as really like a new lesson generator. I'm going to try to be more concise on the nightly strategy podcasts, but that's going to be what it is. I'm going to always start that with how the market closed, what the market health check looks like, what are the emerging themes and opportunities, and I just think that's the right way to do that. And it may actually have some lessons to illustrate that are timely, and so I'm going to continue with that that basic strategy. I've been getting it down to more like 90 minutes instead of the 2 hours plus, so it's heading in the right direction. So basically, in Campfire, what you would see. Whoops. Well, that's just not worth the crap right there. Trying some new technology to improve the situation here. That's just not getting it done. No. Well, anyway, the idea that we kicked around was the use of that. I'll just zero in on the rifle squad here. So what we talked about was the following strategy for these weekend podcasts. So what I'm going to do tonight is go through the report to generate some themes and ideas for the week ahead. The moment of Zen insight this morning was that if you had a fire team or a rifle squad, so a fire team is 4 guys, a rifle squad is 2 fire teams plus a squad leader. You could imagine how you would have a fire team or a squad looking at SPY, and then each rifleman picking one of these 5 XL series. So somebody would pick XLB, the basic materials, and then do trade frames, and then watch Alcoa, Cliff, Nucor, and U.S. Steel, for example. So they'd be responsible for those 4 symbols. And then each of the other guys on the team might pick one sector, even if it was just one symbol, like one sector and one symbol, and prepared 2 trade frames and posted those in Campfire. You can actually do that without listening to the weekend report, because the trade frame is still based entirely on trade location, which is where that price is with respect to the 10-day and the 30-day look-back periods, where it is in the river, basically using that multi-time frame, multi-lens analysis that I do for SPY to set the conditions for the market. Well, you just do that on your sector, your assigned sector and your assigned symbol. You pick which one of those symbols looks like the most interesting trade frame, the one that's most like a critical state. And then you guys could post that in Campfire. And then what you have is we would all collectively have a set of trade frames to study. There might be, if 5 people did that, we'd have 10 trade frames that are already correctly marked up and posted, and that would give you plenty of trading ideas for the day and the week ahead, really, because these mechanical trade frames for swing trades really last all week once you lay out the dimensions of it. And then when you're done with those, you might pick one trade frame of the ones that you traded that day and then posted that in Campfire. And then the first stack would be your plan and prepare. The second stack with your learnings marked up would be execute and assess. And now what we have is this section here. And this section gives us the complete plan, prepare, execute, and assess. in a nutshell. And not only are you taking care of each other for live trading, you can say if you were connected through whether it's Twitter or text or a Zoom meeting or a Discord server, or use Campfire. Hey, XLK is coming into the season. It's in a harsh winter and starting to find a support level. Well, everybody in that fire team could then focus on XLK and then trade it in their own way. And then if you are working up those mechanical trade frames, then your team could really, I think, do well. And then these series of tactical trades then become part of the themes and then the strategies that your whole, either as an individual rifleman or as a squad, you could be doing together. And you're not locked into that model of using the market sectors and companies. You could also just say, look, we're going to pick. There's probably 10 frog champions that are out there right now. And there's a good list of them right there. Just that's not all of them, but that's pretty good ones. Brazil, Mexico, Simon Property Group, Virgin Galactic, Devon Energy, U.S. Steel. I would add now, Wheaton, Precious Metals, and so forth. You could add DIA in there too. You could adopt the same approach if what you wanted to do was use the frog champions rather than the radar screen to find the things that are moving. So it's my belief that the Campfire and Base Camp are well suited for the kind of planning and prep that we can do, and then the assessment of the execution is where the other lessons come from. Is that you can compare your performance to what you did in the game, and that all that really leaves for you there is for you to decide what your preferred method of execution is. I mean, it wouldn't make sense to have a group that had guys that were only swing trading, then a couple guys that were only day trading. The disconnect would not really be sustainable. You really need to kind of be aligned with guys that are working on the same battle rhythm. But in my view, the guys that would be wanting to do intraday could establish some kind of operation like that. I think Dave Anderson is very interested in doing that. And in my view, the basic rifle marksmanship approach to learning one pattern, learning it well, executing it flawlessly, and then using that to study what did the market look like on the left-hand side during the harsh winter. How could I trade some of that with a good pattern like a supported fall crossing or a collapsing dragon? How could I not just watch the harsh winter as the first leg or the first criteria of what's going to be my primary mission of the supported spring crossing? Isn't there some way that maybe I could trade that? Yeah. So that's why I would start with the supported spring crossing, get that one locked in, and then learn the supported fall crossing and the collapsing dragon. And then what you have is really heads and tails of a strategy that gives you all seasons. Once you've got those set in place, it's an easy step into how to trade that sideways quiet channel or Z3 pinch or the super pinch, because then that gives you what to do when there is no movement, when there's no movement to calibrate. It's the lack of movement that you got to calibrate. 10 bars of sideways movement and everything stuck in a compressing river like a giant spring ready to pop. Well, that's what the opening is like. What makes the opening especially tricky, though, is it's stacking up all of those overnight orders, and so the volatility can be a little off-putting. It can be daunting. So that's why I would wait until you have rock-solid execution on supported spring crossing, because that one is non-controversial. You've already seen that it's in play and that the bears have won. And that if the supported spring crossing doesn't work, it immediately rolls over into a collapsing dragon anyway, and then you know what to do there. So that was the discussion that we had this morning, and a way to use the weekend battle rhythm of these weekend reports to really set up that kind of trading for Monday and for really the rest of the week. As soon as Friday closes, if you were responsible for the market, the sector, and the symbol, you could have those marked up as routine practice. Then you can listen to this report on Saturday night, where I'm going to go through and try to identify some special themes that might give us extra reason to favor one sector or another, or other companies that for special reasons should be framed. And then I will talk tomorrow night. On Sunday nights, I'm going to work through the frame on DIA and EWZ for sure. Plus, if you guys work up your trade frames by noon tomorrow or by 2 o'clock tomorrow and post them in there, that gives me an opportunity to evaluate those and talk about what I see. And you're going to get feedback on the trade frames that you built. So what does that sequence look like then? Friday night, as soon as the market closes, you do forgiveness and gratitude, mark up your standard targets, then get the report that I push out Friday night, and then read that, look at that for any kind of extra themes and ideas that you're concentrating on for your trading. Then listen to me read that report Saturday and then compare what you found with what I found. That's how you get better at reading the dashboard. Then you post your trade frames in Campfire before noon on Sunday. Then everybody in the tribe has access to some quality markup ideas, and it becomes very efficient at coming up with low risk ideas that come from a common frame of reference. Then I can talk about those on Sunday night, and then that will help you refine your trade practice. That would be like us working in a wood shop, and you put together your project so far, and then I come around and make comments, and then we all learn together. Then all we have to do is trade that stuff, and then you post your closing charts, one or two a week. Try one a week. Pick one that you want to post in there with your lessons learned commentary on it, and then I can comment on that. And then you'll get feedback not just on the trade as performed, but you'll get some comments from me about the way you're marking up your own charts, the way you're looking at your own trading. So I'm teaching you to coach in that way. And you're going to find that to be an extraordinarily powerful learning tool. Everybody that's done that has gone on to become what I would consider to be black belt independent traders, and are revising and adapting the rule sets for their own best use. And it does my heart good to see them become self-sufficient, independent traders. And then those are exactly the kind of people that give back to the community of practice with their own systems and courses and all that stuff. So that's what I want to say in this forum about what we talked about for a couple hours this morning, as well as answering some very important Q&A that came out of the first hybrid trading workshop. So they've had a week to kind of digest all that stuff I shoveled at them, and they asked a great set of questions, and I did my best to answer them, and I thought it was pretty good. So the video will get posted shortly. Okay, so that's what I want to say about this. And I'll just reinforce what I told them, that the best way to find somebody to collaborate with is to go into Basecamp and post your intentions, your introduction, and what you want to trade on, and then that's your face to the world. If you want to find somebody to work with, then be the kind of person people want to work with, and you got to start with a good introduction and show what it is that you want to do, and that you're willing to put in the work. And then you put your good work there in Campfire, and that's how people will naturally align and become a self-directed team. That's the way to do it. That's where entrepreneurial behavior comes from. That's where independence of spirit and perspective comes from. That's where confidence comes from. That's where masterminds are developed. And I believe we have a supportive environment to do all that, and we have the infrastructure in place to be able to support you as you do that. And that leaves that learning management system as the individual study area, that big library of courseware and lessons that you can study at your pace in your area of interest. And between that learning library and the Basecamp workshop And then the campfire display area is a pretty robust way to develop this collaborative learning that we aspire to do. Okay. So let's just go. I'm just going to go right through the report now, and then we'll get this cleaned up and off we go. Okay. So the market has come back into sideways normal. Let me get my little pen going here. See if I can get this. See if I can get this going. Okay, so we are in that sideways normal. It's come back from bullish normal, and that means we are perfectly poised for large moves in either direction. This is a market in a critical state. You now notice that we've come down from all of the overbought conditions. There was a time last week on Wednesday when every one of those was in the green and powerful. That was so remarkable that we remarked on it. And here we are 2 days later, down 8%. That NDX condition for the market, that affected every single thing in the market. You got to get the market right. That's worth 50% of your final grade. If this was a test, 50% of your grade is getting the market right. I'm going to start talking like a teacher more. I like the sound of that. So we've come all the way back now in the market mosaic to 1.05% above the 200, so that puts us in sideways conditions. The ADX weakened a little bit now. It's still neutral, so the trend just got diluted. We're still in risk on, but you'll now notice that the risk Z is continuing to decline and coming very near to the all-important zero line. And then if it breaks down below here, it's winter. And then this was that horrible sell-off that was a 40%. And this little breakdown here was a time to be short and trading intraday. So when these things roll over and come down, and we are really stalking for a return to winter. And that's where we're getting very close right now, because that Z-score at 0.06, that Z-score 0.06 is basically right on that zero line, and you can see that it's fallen off the cliff. The ETF2 is still at 100% exposure, but that's getting vulnerable. Our holdings still showing some defensive posture here on the key winners going into the middle of the month. So the I would say the blended monthly rebalancing, the holdings for June are still showing some pretty good defensive plays that are less exposed to the volatility in the market. So that's pretty good. On the monthly market health check, it was unusual to have 4 months in a row that were up. So after this big sell-off down here, the previous sell-off, we had you had 1, 2, 3, 4 months that closed really well, and then you had another period of intermediate pain that lasted 2 months. This time it was 1 month down, held support in the dragon, then 1 month up, and then it started to normalize again. So you almost have the big pain, medium pain, small pain, and then resume. So we've had an exaggeration of that. We had that huge sell-off that got all the way out of Z3, but then in the second half of that month, it actually started the recovery. So I'm going to count that as one. That's like a monthly move up. Here was 2, here was 3. Now this one was going really well and got back to here, and at the PSAR flip beyond the Z2, and now has in 2 days, actually in 1 day, dropped all the way back to here, and that was the result of Thursday's move, and then Friday bought a little bit of it back, but it's poised right now in the middle of the dragon, whereas before it was pushing up into nosebleed territory. So we are in a perfectly positioned place for a large move in either direction, and the long-term buy and holders are really, they're on notice right now and are sweating bullets, in my view. On the weekly basis, you can see a similar point of view here, that all of these moves off the low, that was a 4-week, just really nice run. A doji, some sideways chop that got resolved and gave us 3 weeks of really nice gains, and 3 weeks and 3 days. And now in 1 day, we got the big sell off and then half a little recovery. So it's poised right at the Bollinger Band mean. And now we have this yellow zone in here of the dragon to act as a buffer. So if that was a 1 day anomaly and Friday was the start of a recovery, we should start seeing this test come back up to here to the edge of the river. And so you'll see the RL270. It's not what I want, Kenneth. Yeah, you're going to notice the RL90, the RL270, the previous highs and closings, and then the previous high of this week, and then the Z1. All of those represent legs up through this ladder. It's not till it gets above this weekly line that the powers that be are really going to feel safe, right? So those are the measured moves up, and then the measured moves down are Bollinger Band mean, this width of the dragon, then Z-1, belly of the dragon, PSAR, Z2, belly of the RL10 and the original PSAR, and then that's what our price ladder down looks like. So this is a market, even on a weekly basis, is really poised for large moves in either direction. And that's why I didn't carry any swing positions over the weekend. And I will be treating Monday as an opportunity to get some money in the bank with the intraday, and then see which way those trends are starting to move. Who are going to be the leaders? Who are going to be the laggards? Who's going to step up? So we can project who the winners were from Friday, as maybe there's some continuations, but really it's going to start with the market condition, and more than ever, this is less about swing trading and more about market conditions, short term and long, and see who has the deeper pockets. Okay. The daily market health check I covered thoroughly on Friday, so I'm not going to go back through that again. You should already be pretty familiar with all of the pricing markups in the architecture. I think the point that came out from this morning's Q&A was we were talking about, well, which indicators matter and how do you get your directional bias? And I made the point that I consider all of those things in a systematic way, and all of them get converted to these horizontal lines that are decision points and firm places in which it doesn't matter which one gets hit first or what. Every one of those is a place where price has a greater than normal probability of doing a sharp reversal or an explosive rocket move and taken off in either direction, right? So the directional bias starts off with MACD histogram being very important, but by the time I get to this trade frame, I have eliminated the directional bias because that would be a prediction. So I start off with the directional bias about which strategy to pick and which targets to emphasize. But when it comes down to the trade frame, when I answer all those questions, if I've done my job correctly, then I've moved from a position of directional bias initially to a point of omnidirectional trading. And that way I'm not surprised by the prices as they unfold, and then I can trade what I see instead of trade what I believe. I acknowledge what I believe. It helps me pick which way I want to lean on which strategy, and I think that connects me to how other people are reading the market. But at the end of the day, the trade frame is what turns that directional bias into a tightly structured architecture and geometry, a trade frame that gives me the ability to execute without extra thinking in either way. So I went through that one in detail on Friday. So now we'll roll into the blended monthly rebalancing portfolios, the things that really stand out here for me. Just how the U.S. indexes got smashed, and even the heroic performance of Latin America and Brazil, you'll notice, really got smashed as well. And that's what, and so everybody got taken out and shot. The only ones who didn't were treasuries, so there may be some more defensive plays available to us there, up 3%. In the ETF 22 portfolio, technology was the winner in the sense that it lost the least. Here's a case where only losing 2.3 and 2.4% for the week would be considered a decisive win, whereas the energy sector got slaughtered, minus 15, and the financial sector got slaughtered, minus 11. So was that the beginning of the slide, or was that an opportunity to buy quality on sale? Well, if you think back to what I just showed you on this little target array, these 5 members of the XL series, in my view, feel like the most diverse and divergent. Like you're going to see one of those be a big winner and one of those be a big loser. So we saw technology finishing the week as the big winner in that it only lost 2%. And we saw finance and energy as the big losers that were down double digits. So there's a real good reason to believe that that could continue, or it could just completely sharply reverse. Like everybody says, hey, we're going to get a whole boatload of new money and buy cheap oil and buy cheap banks now that they're on fire sale. And you would see that reflected in the company elements of those sectors as well. So there's a real good reason to want to specialize on a sector in some of the components. And so this little logic diagram, this target array, is structured to encourage you to find the mover, find which way the market's moving, find which sector is leading it in that direction, and then find the target that's pulling the sector in that direction, and that's the mover. You may find that it's all you really got to do is concentrate on the market itself, and that's why I've been having us work the supported spring crossing drill in DIA, which is a conservative form of that market, and EWZ, an aggressive element that looks like the market. So that may be sufficient for you, and you don't have to add any of the other complexities of sector and company targeting. But I've also tried to show in the chat room and then through the nightly podcasts why some focus can be very lucrative and rewarding, that it might be worth that extra complexity in order to get the larger moves that are available on these more narrowly focused targets. The alternative to that find the mover is this notion down here with the frog champion approach, in which we just say, as long as we keep looking at things that are statistically more likely to have large directional moves in either direction, we can be simple in that sense and just find the mover among the frogs because they've been so reliably direction. So two different ways to skin that cat. And to the extent you're using teammates, then there may be a very efficient way to do that. And I made the point this morning about the use of the bundle is a nice organized way that you can have some robot support on your team to help you find the movers and frame the trades. And that actually really does a great job of connecting all of these elements together into one concise, bulletproof toolkit. ETF 32 portfolio, new things that jump out. So now gold is on the list in ETF 32 because we've added a few more symbols in there. So gold was a defensive play. The short-term treasuries were flat. A place to park money, but you're not going to make big bucks. Yeah, the industrials got smashed too. Russell's got smashed. So again, this is a market. Who's going to be the leader? In the Dow 30, Apple and Microsoft, which we've beaten the drum on that in good times last week, also held up the best in terms of the sell-off. Apple actually made money last week. So what that tells you is the power of relative strength to make gains that everybody wants to get on board with in good times, and a willingness to hold those things and buy them on sale when everything else around them is suffering. That's why you're interested in relative strength leaders, even if you're just a day trader. Now, the things that got slaughtered, ExxonMobil, JP Morgan, Boeing, and Walgreens, big losers. And all of those come out of the 3-month and 6-month and the blended underperformance. So that's the opposite of relative strength. What that shows you is that while it feels attractive to buy things that are on sale, like a catfish, and trying to get some recovery out of the bones of those things, that there's no conviction on folks that are in that business, that a lot of those value hunters are hyenas. They're just there to scrape over the bones, get what they can, and they have no long-term conviction in those things. So a true value player, a guy like, say, Dan Ferris, who, I don't know if he still does it, the extreme value approach from Porter Stansberry's group. He was a guy that had the courage of his convictions no matter what. He would do his own due diligence, and on the basis of fundamental analysis would create a value narrative, and then no matter what else would never change his mind. And he locked into a few things that convinced him that was the right way to go. But this chart here, which you see all the time, simply demonstrates the fact that there's a lot of people who buy things on sale who do not have that long-term conviction that the market will someday see the value of that company. That shows you right there that there were people that had bought, like Boeing, which was up at 80% over a month, and Travelers, which was up 40% for the month. This week, they both got slaughtered. And now they're still up for the month, but they took a serious haircut. And that's because people that had enjoyed that rebound from oversold conditions, were not in it for the long run. They were there really to exploit a pricing anomaly between fear and greed, and saw a chance to make a low risk idea, but were more interested in preserving the gains they'd made than any kind of long-term conviction, especially in a world where all of the normal rules of valuation are put into question because of the abnormality of the times. So I listened carefully to who I think is the smartest academic on the subject of valuation, Aswan Damodaran, who teaches it. I think it's from Stanford. And he does a beautiful job of analyzing things on a fundamental basis. I thought his analysis of Tesla's opportunities were outstanding. But the question I just emailed him was a genuine one, and that is, when we are in such abnormal times, do you adapt your valuation models on fundamentals or set them aside for a period of time? And how do you know when it's time to go back to just strict fundamental analysis? Or what kind of model do you have that's robust enough to handle routine things routinely, but also can handle a 3 or 4 sigma event like we've just been witnessing? So, well, I'll see if he answers it. But that's really, no matter what he says, I've got to have a way that I can accommodate for that for myself. And that's where the trade frame that I render in there, once I pick my, my stop positions and I get all out of things, and that I'm managing that risk, my intention is to stay alive long enough to ask the next series of questions, because I know that when times are back to normal, that our standard methods of approaching the trade frames and entering is going to be fine. And so that's the lesson that I really want to illustrate here, is that those relative strength leaders are leaders for a reason, and that seems to shape the behavioral finance decisions that people make when it comes time to rapidly protect assets, and where do you go and where do you park it. So this one clearly shows that the leaders are leaders for a reason, and that the laggards, while they often offer some opportunities for value plays, you got to preserve those gains, maybe even more than the gains of things that are outrageously running away, because these are the ones where the big wins, in my view, are coming from. Sector spiders, again, the sector spiders that had been smashed on the 3 month and 6 months had a larger percentage of these reds and yellows than the ones up here at the top, where you're seeing more greens and whites. So the XITK, the innovative technology self, that XLK is a way to play that. See treasuries in the middle there, but energy, regional banks, all getting crushed. Reinforces that whole notion. You'll see, I think, also this, you'll in this one, and then also in the big ETF too. That's why I like looking at both extremes of that database. I want to shift to the regional report now. There's not much green on here, and what there is that US Tech at 69. That's the Qs and XLK. Value is lagging, growth is gaining on a relative basis. Japan is holding up well. So when you think about that blended monthly rebalancing, the ETF 13, there was one position in technology, there was one position in Japan, and one position in treasuries. Now that's a once a month asset allocation decision based on relative strength. That's not looking that stupid right now. So we can actually use this kind of analysis to help us get those larger swing and core position themes going, so that we can figure out what's going on. We would have seen also, and we've been seeing for months almost the whole year that Latin America continues to lag. So if you're looking for those kinds of opportunities on the short side, you can use these broad relative strength informed relationships to sort things out. The top 30 members of that ETF2 stack, gold. I'm going to go look at that XOP as an opportunity to either exploit it to the downside or catch it on the upside if energy sector rebalances, right? Because that is a very liquid, smoothly trading, almost a leveraged energy fund. Consumer discretionary is green and white. Home construction, green and yellow. But some of these other ones are giving up some of the gains. That white and green are areas of concern. So again, more interested in the big broad indexes, and I think that XL series more than anything else. Yeah, so the most liquid and volatile symbols on there, XOP and EWZ down here in position 27 and 28. Lots of volume, lots of volatility, pretty good trading targets. XLE is also at 4.8, and GDX, the gold miners, at 4.2 in terms of ATR percentages. So those are the ones that are giving you the biggest directional moves, wins and losses, and have the kind of volume that makes them attractive on a liquidity basis. I'm not going to go through this one, but this is that full up score sheet, and you can do that on your own. I would just notice at the bottom of the stack, regional banks, Brazil, and USO, the oil. That's pretty much what you need to know about where to look for exploiting further weakness, wouldn't you say? KRE regional banks, lots of volume. Brazil, man, that's just a gift that keeps on giving, man. I'm telling you. Shifting to the daily report now. All right. We've already seen these charts. I'm going to go right to the tactical summary. So in the Dow 30, what I'm seeing is lots of channeling and overreaction signals. Not surprising given that sharp move Thursday and Friday. There's a 5DD available in Merck, and it was a big percent loser on Friday. So that would be an obvious place to either see the rebound going up or exploit the failure if it becomes a 6-day down. 551Ws in Disney, IBM, and Cisco. Those are ones where it actually had a white candle and some relative strength on Friday, so that's possible, as is Goldman Sachs. Boeing and Dow Chemical both had, or DuPont both had bumps up on Friday. So lots to choose from in there. That weakness in Walmart is an exploitable signal too. Looking at the ETFs, only one doji in the whole stack, and that was Treasuries, the defensive play. But look at all of the auto framers that fire better than 2 to 1. So it's really a buyer's market. Though I like the ones at the bottom there, XOP, ILF, and EWZ. There were guys that were willing to buy those. They were up strong on Friday. That's where all that volatility comes from. People are gunslinging in there, so that means there's an opportunity for a measured approach to capture some of that volatility. Mexico and real estate also were big winners, so possible follow-throughs there as well. Mm, not much on the super pinch side of things. Um, on the pinch and stretch report, the most negative Z stretches are the ones that I'm looking at right there, that second column. Walmart, Pfizer, Johnson and Johnson, Merck. That whole, 3 out of those 4 are embedded in XLV. I can't psychologically short them, but I would be ready for them possibly to have some recovery moves. And then the most positive Z stretches over there on the left-hand side, Brazil and Latin America put in a good effort on Friday to offset the horrible losses they took on Thursday. But that means they got their hair on fire running through the desert. And that kind of panic buying and selling means much more volatility coming. And that's perfectly suited for our statistically adaptive patterns. So that's why they're on the list. A ton of targets here for the auto framer for you to look at. Everything on that list has a better than 2-to-1 mechanical trade frame to get it back to the 10-day high, which would have been probably either Wednesday's high. Probably Wednesday's high would have been probably the 10-day high. So now you can see, working from the top down, who has the best combination of risk and reward. Things that really stand out for me, XOP is on that list in the top 5. XLE is there. I don't know I need to look much further than that. XLE, XLF, and XOP. Beauty. And all your mechanical trade framing data is on that chart. The regression line fractal framework, the energy sector continues to show, the most opportunities to the upside. And then the ones that are the strongest as far as being in front of their or north of their fair value. XOP once more. Apple. There were no daily squeezes at all, and that's just because of that 2-day volatility pop and that large range day on Friday. There's just not that 1-day pop available. So this looks more like trading in the yellow zone, the intraday stuff, to emphasize. There's still a lot of symbols now in the summer, but plenty that rolled over into the fall. So to me, it's pretty clear that the relative strength leaders are the ones whose MACD histograms are still in the fall. So we're not surprised to see names like Microsoft, Apple, Amazon, McDonald's in there. And among the ETFs, not surprised to see, maybe I am a little surprised to see Brazil, but that's because the rebound had been so good that it hasn't completely rolled over yet. So it's still a fight in those. But every one of those that rolled over into the fall, there's some of those profits are being undercut. The NDX shows you the things that got really smashed hard over the last 3 days. Walmart, Merck, Intel, and Procter & Gamble. And then the relative strength winners are the ones at the bottom of each of those stacks on a 10-day basis. Apple, U.S. Steel, Microsoft, Boeing, Treasuries, gold, emerging markets, and Brazil. And that just tells you that there was a good recovery there on Friday in Brazil. That kind of 1-day move is why it's so nice to be on that intraday and just get paid while it's moving, instead of trying to guess the direction of it for multiple days in a row and longer term themes. Just enjoy the volatility. The same way that guys in Maine take a little maple syrup off the trees when it's time. That's everything I wanted to cover for the weekend report. And I'm going to frame up some trades for tomorrow for Brazil and DIA and probably XOP. So if I was you, I'd pick 2 other ones. I would probably frame those 2 so you could compare your frame to my frame. And then I'd pick 2 and consider posting them in Campfire, and then study the ones that other people might put. And then I'll ask you to have those in there by 3 o'clock so that people have a chance to get it done. And then that's what I'm going to review tomorrow night, and that'll take us into being ready for Monday. All right, guys, that's everything I got. That's an hour. That's what I promised. We'll get this published. and posted tonight. And I'm going to post the Patreon link for this morning's podcast, the very next thing that I do. So off we go. All right, that's all I got. Take care. Keep your wrist measured and your powder dry.